arranging this amazing event. I think it's really important for me to mention, I've been really impressed with the titles, the topic names today. I mean, unleashing automated marvels, supercharging compliance. I think it really needs that level of innovation and change in this space, because certainly the topic we're going to discuss today from a technology perspective, from an AI innovation perspective, is there. It's not something that is in the future. It's certainly something that is here today and already being applied within our organizations. My name is Mohamed Ebrahim, partner at Deloitte Middle East. 7 days left in my role as head of financial crime for the Middle East practice, after which I moved back into my bigger area of passion, which is AI and data, so I think still relevant to this panel and topic. And I have amazing speakers with me. I'll let each of them introduce themselves.
Good afternoon, Waheed Rathore. I'm the Group Chief Compliance Officer for Dubai Islamic Bank. I've been in the region for about 23 years, working at different financial institutions, and I've been also been a regulator for about 2 years of my career out here in the UAE.
Good afternoon. My name is Mohamed Daoud. I am the industry practice leader for Moody's. And when I'm saying Moody's, it's Moody's Analytics, not the rating company. I have 25 years in banking and finance experience in the US, Europe, Middle East, and I have been in this compliance business for the last 20 years.
Hi everyone, Nishant Nottath. I've been in UAE for about 18 years now, always in financial crime or consulting. I was with KPMG initially in forensics and moved on to Standard Chartered as regional head of AML and was global head of TM at HSBC. And the last 3 years I'm in Mashreq, leading whatever you see.
Afternoon, everyone. My name is Leago Papo. I'm the Director of Regulatory Affairs and Compliance at HAYVN. We're a crypto exchange with offices in Abu Dhabi in the ADGM, in the Cayman Islands, Lithuania, BVI, and in Australia.
Thank you all. And as you can see, a really diverse range of panelists with a lot to share. So let's get going. Maybe Nishant, as a starting point, we talk about automated marvels. And obviously in the world that we live in, we think about the new topic on the hype cycle, generative AI. There's so much moving and so much happening. What do you see as the trends in the future of compliance automated marvels?
Sure, thank you very much. I guess I ask this question pretty much every time for the last, say, 15 years that I've been around. And if you look at a typical bank, we are still very much stuck with more or less the same old technologies that we've all been using for the last 15 years. But what gives me a lot more hope is that things have been changing quite significantly over the last few years. There is a clear shift that now we can see, instead of get stuck to just the rules-based monitoring that we have always seen being right at the center, there is a real shift in terms of adopting more and more new technologies. And when I say more and more new technologies, adopt it in a more sensible way. So we have all been hearing about AI, machine learning. I can actually see that machine learning use cases are really getting in there. And for example, we use machine learning primarily in different use cases like predictive modeling. So we kind of look at all the alerts that get generated, predict what is the likelihood of certain alerts being of higher risk or not. So we have developed machine learning models that's been taught over the last, say, 18 months of data, essentially. We're also using machine learning mainly for clustering and segmentation of clients in the right way. And finally, we are also using a bit of unsupervised machine learning to monitor correspondent banking transaction sets. So things are really happening out there. But what really is exciting and what I see into the future is 3 main trends. One, I can see now perpetual KYC going to become pretty front and center. As you all know today, KYC is all being run and there is reviews that are happening once in a year, once in 3 years, 5 years, etc. It's become pretty much useless. It's not really helping in the risk management. All it does is to help us stand up to the regulator and say, oh yeah, I have done my periodic review. But it's not really doing any substantial risk management. We have no more choice because the products that we have today in the industry is also very different. Risk is coming in very fast. Today, you can open a bank account in just 2 minutes. Right now, I can flip my phone out, put my Emirates ID, take a picture, take a selfie, and in 2 minutes, my bank account is open. In such an instance, the barriers of entry has been reduced so much that you no longer need elaborate processes to launder, say, $1 million or $2 million. All you have to do is just open, 200 accounts, and then, fund it with, say, 10,000 and this, you just laundered it, and they'll just throw away. It's like use and throw, essentially. So we have no choice but to change. The PKYC into the future becomes very critical, and the perpetual KYC has to be essentially built on, and this kind of links up to the ongoing monitoring too. You got to really think beyond the transaction, essentially. You got to think about every single crumbs of digital footprint left by the customer in every single interaction with the bank. I have seen a lot more advantage of looking at how the customer behaves through the apps, etc., to actually predict risk and take on from there. The next major thing is LLMs. So large language models, we have all been talking about it, we have all been hearing, but I'm actually very happy to say that 2 months ago, we actually embarked on proof of concept to see if large language model, or Gen AI as I call it, can be working for us. And just 3 days ago, we saw the first ever automated prompt. When you put in the prompt, you actually get all the summaries coming in. It was gibberish to start with, but that's the case with any LLM models, and I kind of always call it akin to a kid. A child is born, it only cries like in one way, and then slowly over time it starts learning how to cry better, and then it starts learning words, etc. But I'm so happy to have seen the first ever output, and I can see that the future is going to be a lot more LLMs to take on from here.
Excellent. Thank you, Nishant. Maybe to move on from there, Mohamed, if you can, just based on your number of years of experience in the space of KYC, due diligence, etc., which, given some of the technologies and advancements that Nishant just spoke about, where do you see these applied within the compliance world? Where do you think the most prime processes, if you like, are for application?
The same principle that just Nishant highlighted, PKYC. Let me just be more directly practicing how we were doing 10, 15 years ago. 10, 15 years ago, we were having this client. We need to check if this client or this corporate is a red flag, and we will be doing a manual check on manual list that we are receiving on them. And we are seeing that the regulation has changed. There are more requirements, more sophistication in the way the sanctions are made, sanctioned by the sanction by, before sanctioning in one country, it's easy. Now the sanction is by sector and subsector with a lot of condition, and this makes it very, very complex. The second thing, we are seeing the requirement going through, you need to know more your corporate and who is behind this corporate, and there is any link, a red flag for this corporate, are you working with maybe in worldwide, globally, what are their credentials, which mean that investing in technology, buying technology alone is not enough. You have a strong dependency on external data. The external data is either who are those entities I'm working with, those corporate, and this data need to be, updated constantly. So in the reality, in Moody's, we believe that the combination of technology, the latest tech, with the data, has to be the only way to solve this problem of still manual, screening, manual transaction monitoring that we are seeing. So when we are talking about perpetual KYC, like Nishant is highlighting, then you are having to have a continuous feed of data that need to be in order to do that. And today, frankly, I am very surprised sometimes when I see a lot of institutions still having a very old manual due diligence to be done, KYC, and they're complaining about that while the technology has changed and the data has changed. So there is a possibility today that you can onboard the company, and based on the ownership of this company, based on what is the percentage of owner, when this company has been created, what is their financial health, what is some of the criteria, you can detect immediately if it's a shell company or not. And you don't need to do a lot of manual analysis. You can have it in the screen saying, this company, based on these parameters that you have agreed, it is probably 70% rating as shell company. Okay, so therefore, you have to combine the data. The same thing when we are talking about KPIC, the perpetual QIC, sorry, you are talking about getting an international feed automatically. You can very well onboard customer and having a system picking up the certification of registration automatically, either in the country or outside the country. This data, I'm talking about the data to do that, and the technology has evolved while we are still seeing a lot of institutions using my grandmother technology and workflow to do that.
Yeah, that makes a lot of sense, and I think just thinking and reflecting on the last probably few months, really exploring this topic of, I think Nishant mentioned it, LLM. While it's not new at all, I think the first LLMs were, number of years ago, decades ago already that were in place. Of course, we've got the advancement of infrastructure, faster ways of retaining this data and keeping this data and then processing it, and that's why it's now coming to the fore. But as you say, I mean, I think perpetual KYC being the sharp end of the wedge, really, and off the back of that, you can start to think about how to improve sanctions, how to improve transaction monitoring, et cetera, et cetera. Leago, if I can move on to you, I think, everything we're talking about here, and I know obviously even hidden in the topic there is around AML compliance. What are the non-AML related processes in your mind that you think can also benefit from similar technologies?
Yeah, so I think that's an area of concern for me, especially when we're talking in forums like this and you're talking to industry peers, is there's a lot of focus around AML and compliance and automation, but it's really difficult to understand from a consumer perspective or a client perspective how the compliance world benefits them. So if we look at some of the risks that they're exposed to, and we also look at what's happened in the past 12 to 18 months within the industry, and specifically, say, within virtual assets and crypto, whenever there's been a firm failing, you always ask the question, could that have been avoided? Could something have been done by the compliance department? Could anything have been done just to ensure better consumer protection? So I think from a risk perspective, those are the things that aren't really or haven't really been considered and prioritized to the same level. So the examples that I would come up with would be, in case of insolvency, from an automation standpoint, what could be done from a monitoring, reporting, and a risk assessment perspective. From if I'm a client and I know I've placed my assets and my money with a particular institution or multiple institutions, how do I know that they're keeping it correctly? How do I know that they're not going to misuse it? And again, that feeds back into insolvency. Then we look at elements such as data protection. Are they using my data correctly? Is there any risk that my data is going to be sold? If it's sold or if it's been used by someone else, do they have my permission? Do they have my consent? Is it going to be kept in line with what I expected it to be, or how I expected it to be kept? And is it going to be used accordingly? Then I guess when you're looking at it from a firm perspective, there's always the risk about, are you employing bad apples? So the competency of your employees and your staff. So as everyone grows and as we move towards a more remote work environment, so again, I look at HAYVN, we've got a significant number of salespeople that are across the world but without a fixed location. So how do we ensure that those people are competent? How do we assess the competency? And how do we ensure that they're always providing suitable or offering suitable products and they're not misleading any of their clients? Yeah. So that is something that we really are focused on. And then from a regulator standpoint, the key concern and something that we are constantly discussing with regulators is, as the industry evolves, it's very much, again, from a crypto perspective, it's driven around technology. So what are they doing in order to keep up with those developments? Because there's always a risk for all those three stakeholders that if technology or if the regulators are lagging behind, how are we going to be able to hold people accountable? How are we going to be able to make sure that when a bad apple is identified, action can be taken, and we've got tangible evidence of that action being taken and people serving or consequences in the forms of fines, them going to jail or anything along those lines. So I feel those are some of the key areas that, from a risk perspective, need to be factored in, but I'm not too sure as to how that's going to be achieved.
Yeah, I mean, it's a really, really interesting perspective, because usually application of technology and data within the compliance space is as a result of an event. And I think it was mentioned in the last panel as well. There's a coin that was termed, not by me, but I've heard it, is the regulatory dividend. And that's essentially on the back of regulatory compliance programs relating to data. An exercise was performed to understand how much of that data actually serves the value side of the coin. And it's somewhere between 70 to 75% of the data that you're processing for purposes of compliance and building in models, advanced models for purposes of compliance, can actually be turned to create value for the organization as well. And I think some of the other risks can also be considered in a similar light, using the same data, same customer data, the same transactional data, the same behavioral data that essentially can be applied. Waheed, maybe, just if we kind of bring it to life, where have you potentially used some of these technologies, new ways of thinking even, within your organization, and has it had the desired impact?
Yeah, thank you, Muzammil. Good afternoon. So just to, having heard from my colleagues, the way I've seen the evolution of this and the adoption of these technologies, I see it as a journey. If I just backtrack 10 years, right? 10 years back was where compliance focus, when I started into compliance, I mean, nobody used to talk about it. It was a very, unromantic kind of a job to do. But in the last 10 years, if you look at it, we all started towards first developing effectiveness measures into our compliance programs. That's where the initial investment into resource and capability started to happen. That period continued for about 2 to 3 years, and then we realized that some banks and some institutions have gone overboard, and suddenly the compliance bill is looking too high. Of course, some could justify it in the backdrop of what was happening in the world in terms of regulatory enforcement actions and so on and so forth. And we started talking about efficiency then. And then we started looking at ways to optimize costs and start to bring in some automation. That has continued for some time, and I think over the last 2 to 3 years in particular, we are now in a phase where we are talking about compliance resilience. Resilience to me is, in addition to effectiveness and efficiency, 2 additional elements where I believe the technology has really been very helpful. And those elements are A, the customer experience side of it. I mean, whatever we do, we have to do making sure that we are not overburdening the customer. And the second thing is almost the same weight as the first, is the response time, the ability for the institution to respond to evolving risks and evolving changes. Now, how do you achieve resilience? To me, the fundamental requirement to get to the stage 3 is about developing capabilities. And the capabilities are a combination of what tools you have available in the market. Some of my colleagues have talked about it. But the internal capability is about developing the ability to use those tools to this end, right? And that's where I think most of the institutions today are sitting, where we have the tools available. They're very smart tools, very effective, extremely good to work with, but about the capabilities internally within the compliance functions to be able to use those tools to the level where it delivers the right value from a customer point of view and from a resilience capability point of view. And I think that's where the analytics, the capabilities of the institutions come. And if you see the different institutions who are at different stages of evolution, you will see those institutions which have developed the internal capabilities. And by capabilities, I mean 2 things. One is the capacity, and second is the skill set, right? Those institutions will be slightly ahead in this journey as opposed to those which do not have internal capability. You might have a fantastic tool that Mohammed is able to sell to you, but in terms of the optimal value that you get out of it, is not going to be the same unless you have it married and matched up with internal capabilities to be able to use that tools. So for me, these technologies have actually helped me develop those capabilities internally. And what capabilities are we talking about? We're talking about analytics capabilities within the compliance function. Previously, analytics used to be, when I started my banking career, the data warehouse people were the data people, they were the gurus. Only they knew exactly what was sitting on the books of the bank. Today, my compliance team has as much visibility of what is sitting on the books of the bank as a strategy office or a data mining office or a master data management technician has. So then, of course, the skill set to be able to identify what's coming through our detection capabilities. Prevention is a completely different phase, and that's where the link up with the previous panelists happens, which is the risk, which I believe, especially from a fraud risk perspective, also from an AML financial crime perspective, the prevention methods have to be stronger than the detection methods. I think the detection methods are probably not going to work if it comes to this. So these capabilities, the skill set, the ability to use the tools, the ability to use the data is something that I have personally, over the last at least 3 to 4 years, have been experimenting with and trying to get the best value from a compliance business.
Thank you, Waheed. Leago, if I can come back to you, and Waheed touched on this area of client experience, and if we think about the automation, maybe you touched on it a little bit in your previous response. Where do you see this increased automation, new technologies having a real impact on investors, clients, etc.?
I think the first place that I see it is just knowing that my money is going to be safe. So if I know that processes are automated, that there's going to be controls in place that not only ensure that my money won't be misused, and it gives me visibility and access to know exactly how everything's been applied, that would give me comfort, and that should really be the key focus around here. But that also means that, so that would be for investors and clients, but then there would be controls that underpin that would be beneficial to the institutions themselves. So that puts them in a position to articulate that to the clients, to the investors, whether you're a layman, whether you're an experienced investor, or sophisticated in any way. That's just something that makes it a lot more relatable, because I feel that a lot of the things that we're doing, it's very difficult to get that buy-in from the general public. From a regulator standpoint, we've seen this in other jurisdictions where there's a lot more automation in terms of the manner in which reports are submitted, where once reports are submitted, there's some reviews, some assessments, some kind of a risk assessment of sort that's conducted at an individual firm level as well as at an industry or at a particular type of firm category, where they can come out and see, okay, this is a risk event or this is a trigger, we need to investigate that more. So I feel that's where a lot of the benefits would come in, and it's going to be something that can be readily demonstrated to all of the key stakeholders.
Yeah. So it's not just increased client experience, but also confidence.
Yes, I think, so from a client experience perspective, things are already been automated. So we were speaking earlier about how easy it is for you to open a bank account. Yes, it's easier to open a bank account, and it's with that, there's a lot more that's been done around fraud prevention, sanction screening, AML, but if I open a bank account in 2 minutes, how do I know that the people that I'm dealing with can be relied upon? The products that they're going to be suggesting to me or recommending to me are going to be suitable, and also that they are competent, they're able to perform those tasks. If there's something that can give me a report or some kind of assessment, similar to what you'd have from a fund fact sheet, that's going to put me in a much better position as a consumer.
Yeah, makes a lot of sense. Mohamed, I'm going to come back to you and maybe just change direction a little bit, just on this topic of entity resolution, and it touches on what was spoken about earlier around due diligence, perpetual KYC. I think one of the most important things to get right in that process is to understand the entire ecosystem of the entity that you're dealing with. Maybe just expand a little bit more on the topic of entity resolution and how Moody's kind of focuses on that.
We think that, and you already highlighted what you were talking about, should we focus on silo process related to only compliance and risk? Or should we widen up the review? A lady this morning was talking about opportunities. So the question here is, I can have a technology and data completely integrated where it could be used by the ground floor in the procurement when they are doing the KYC and who I am going to work with them and if it's sustainable or not sustainable and so on. It can be used at the first floor or the MLRO, second floor, the compliance, and maybe the third floor, which is the credit risk or risk. We are seeing too much process done, although sometimes with a good technology, but in silo, while the issue has to be taken as globally because the customer is always one. The corporate that you are working with, one. We are having a tendency to see a different risk perspective for the same entity that we are working with. This is the first thing. The second thing, if we are having a system to track with the artificial intelligence, with the predictive analytics, whatever, what this entity is doing, and with this, then the issue here is how come that I am going to start doing again manually by getting the file of this corporate and looking to who is the director, who is the shareholder, what is the percentage, why this is can be completely automated. So entity resolution means I need to link the dot between what I am doing as a business, whether with any entity that I'm doing with, whether it's individual or corporate. In Moody's, we are focusing on getting the right data at the right moment for the perpetual KYC. Today we are talking more about periodical KYC, okay? And we are making sure that the same data, if you are assessing Ibrahim as a potential risk, why don't you assess also what could be the other opportunity in this sector? Which means don't look from a negative point of view, but look to this one from. So we are seeing a lot of entities, a lot of institutions using our data and our technology in order to do more marketing, more business. So the question here is justify those investments from a reward point of view, from a growth point of view, and then the compliance became one part of it. This is what we are seeing in the market.
Absolutely. And I think importantly, you speak about opportunity and risk. And of course, we've spoken about the benefits and opportunities of using technology. But Nishant, maybe if I can ask, what are some of your concerns? What keeps you up at night when you think about applying these technologies?
Sure. I think there is a couple of things. And right at the core of any new technology, as well as the super automated way in which things are going on, lack of knowledge or probably half-baked knowledge. This is the one big thing that really worries me. And unfortunately, this is a big problem for all compliance professionals. You know, we are good at risk management, we understand risk, but we are zero or slightly above zero in terms of the actual ways in which things work. And there's a reason why there's so much of inertia that is there for us to move away from easy to understand rules-based monitoring and simple KYC, etc., because it's easy to understand. And the moment you talk about machine learning and stuff, you kind of feel, okay, I'm just going to outsource that thinking process to the specialist, the data scientist. Now, it doesn't work that way. I have learned and burned my fingers big time because there was a time when I did not understand how the machine learning models work. And 9 times out of 10, I found out that the models did not really solve the problem that I started off with. And then these are some of the best brains out there, but when you kind of talk to them, they say, well, you know, we don't know. We did everything according to our processes and world-class processes. And that's when I really realized that there's a big gap between the language they speak versus the language that we in compliance, typical risk analysts speak. So many a times I've seen, so let's kind of unpack this a bit. Let's say I'm going to give a problem statement like this. Build a machine learning model that can predict the likelihood of some sort of a brand new scanning system in the airports that will identify a terrorist. As in, there is 1 million people walking through, who's that one terrorist? Okay, predict it, because I don't want to stop every single person. I can then train my models over the past, say, 5 years of training model. And the way machine learning models work is, if you tell them, oh, please be as accurate as possible, it will simply say, you know what, entire 1 million is non-terrorists. Why? Because it will still come out as, oh, I'm accurate 99.99999% of the times. But then, of course, you obviously don't want to miss other one. But if you put the problem statement the other way and say, oh, no, you must find the terrorists come what may, it will say all the 1 million are terrorists. You'll stop there. Then you introduce the problem of false positives, right? So this is where things like class imbalance comes up. And I never knew this until I actually did a course for almost a year to study this so that I can have these conversations with the data scientists to actually say, think about class imbalance, because STRs, it's 1 out of 100. So think about class imbalance and use recall as the metric, don't go by accuracy. Those kind of conversations can only foster when the knowledge levels within compliance also goes up technically to a certain extent where you can actually have that conversations. Increasingly we are seeing digital IDs and being used. And I keep coming across fintechs who come and say, oh, we have this amazing product and we do digital ID. And I say, how do you do it? Oh, we ask you to take a picture of your Emirates ID, which has got a very small stamp size picture in it. And then I say, yeah, what is the next step? Oh, we then ask them to take a selfie. Great, next. We then compare the selfie to the photo. And I said, that's where you lost me. Because how do you ensure that that Emirates ID's picture has not been doctored? This is exactly why the central bank has issued the guidance saying you must only use digital ID identification models that are approved. For example, I don't want to be selling this to, but there's this product called EFR, for example, Emirates Facial Recognition. That data, your face, is actually going all the way into servers, which has got data for the past many years, comparing it and then giving it back saying yeah or no, essentially. So as compliance officer, the half knowledge is the one thing that really worries me. One, because it results in you not achieving what you want to. Two, it introduces brand new risks, and there's no more time. Things happen so fast. This would probably be the biggest thing that I worry about, half-baked knowledge.
Thanks, Nish. And I think I encourage any compliance professionals to spend some time with Nishant, and I think he probably speaks more eloquently about analytics than us as analytics professionals.
At your risk.
Waheed, if we can maybe finish off, I think we've got a few minutes left. I'd just like to get your thoughts on some of the further risks associated with application of data and tech, being a large financial institution. What are the risks you see?
There's a hall full of hungry people, so I will keep it short. Look, having been through this, for the last few years, there will be certain processes which will get redundant, and they're already redundant to me. I think we're just dragging our feet. So the concept of this periodic KYC refresh to me is a redundant concept. I never subscribed to it in my life. I don't like it. I've not seen any value out of this. With due respect to my audit colleagues and this audit process of going and looking at something and sampling it completely and then writing a report and then sharing a finding, to me that's a redundant process. This is not the time for it. Time is the quick time reviews. You immediately, we don't, you got to do the vitals and see if you can save the patient rather than doing postmortems. There will be certain processes which will never get redundant. So the value of human judgment is never going to get redundant. You will have, now, the proportion of how much you apply that along with the technology and the capabilities that's where the institution has to strike a fine balance. And that's their job as a compliance practitioner, to ensure that you always strike the fine balance. You see, when we talk about dynamic perpetual KYC and all that, fantastic concepts. Trying doing that with the conventional core banking system. Not going to work, right? Try doing it with a combination of a very sexy looking front end and a very analog looking back end. It's not going to work. The dynamic KYC process will only work beautifully when you, on a trigger basis, you're able to go to your customer and ask a specific question that the customer can immediately respond to you by enabled technology solution, which could be a web link, which could be whatever you send, or online, or whatever, and the customer has a trust that he or she is responding to the bank that it is supposed to be, he or she is supposed to be responding to. If there's a threat and there's a risk, the customer is not going to respond to you. So identify something, You don't have to, ask the customer to fill 10 pages of forms. Ask a specific question, enable the customer to respond to you immediately, capture that information immediately into your core banking system or whatever systems you need. This is how the dynamic KYC process. A breakdown in either of these steps is going to fail the process. So the idea is to pick up a process, identify where there's an opportunity to do end-to-end value creation, and end-to-end means customer to the bank and vice versa, and use those processes. If you try to do everything, and these are baby steps, okay? It doesn't have to happen overnight. Take your time. The world is not going to end tomorrow, but get it right. That's what's important. Thank you very much.
We are out of time. The food's warm, and I'm sure everyone's looking forward to lunch. Thank you very much to the panelists. Great insights, and I hope everyone got something out of that. Thank you.
Thank you.